So, as it seems, as of yesterday, we had some cracks into the stock market here and there, and we will talk about this in today's video. Everything you need to know about seasonality, about the China fears, about growth worries, about the Fed meeting, and finally also a little bit of NFT madness, because with every crash there's also some madness going on. So we will see all of that here in this video. So make sure to smash the like button and subscribe if you are not subscribed yet. And if for all of those who want to get to the Discord for lifetime, there is the x10masterclass.com with the space 35, you get 35% off. So let's dive in. Okay, so seasonality is quite interesting because it's always a statistic where the stock market could go, okay? So Monday usually is always a good day. Well, it wasn't yesterday, obviously, as of this. If you're looking into the stock market, it was quite, worrying for some of the people. Not only the stocks, but, also Bitcoin and crypto in general was crash. And here we see, when the market is, shaking, then also crypto is not safe at this point of time. But after this crazy rallies, after all-time high, we see something that is, quite normal, right? There's a small pullback, there's worries here and there, though the news are from last week not new, right? You have the Evergrande story that we will talk about next. But in general, you can also see by the seasonality that the September of every year is a little bit of a lower month. Though if we start positive into the September, which we did, then usually the September is not that bad. So seasonality, yeah, it's always a little bit, statistics, obviously, that fits most of the time, not always. And therefore, we cannot say that this is purely seasonality. That's definitely some worries. And one of the worry comes actually from China. So the China fears are real. Evergrande, one of the biggest property developer in China, seems to have run out of money. Yes, how crazy this is, I will tell you on an example. So when suppliers did something for Evergrande, they accepted not a payment, but a letter by Evergrande that, they agree on this and that, and the payment will be done there. So the people even traded with each other with those papers, and now that Evergrande has problem with the liabilities raging up to $300 billion, and the government said, this they have to get out of themselves, then this is a big problem. Usually people in China don't go on the street and, make some, let's say, their opinion loud and, waiting in front of buildings and so on. But this time, all over the news, this was something either staged or real serious. Okay, there's people that say, I have 50 people to pay this month and I cannot pay them. I need the money. Okay, so this is quite serious. And I think that this is the whole boom of properties that we have seen in China, which is quite crazy, because it was just a matter of time that it happened. Okay, with the boom of industry and more and more people get more and more wealthy, they were selling apartments in the millions that they were not even started to build. Okay, so this is how crazy it was. So there's now some key points today. There is one bond payment that they have to make in the millions, and then on the 29 is another big one. So I think this will be some crucial dates, though compared to the overall liabilities, 300 billion, that's small portions, and I can imagine that they would just pay those. But it stays interesting because there's so many banks and companies and people involved into this biggest property developer in China, that this could have a danger for the local market, but slightly different, or let's say huge difference to Lehman Brothers, that basically was on a pile of worthless finance products, was just gone insanity. So it's a little bit different, though definitely something that pressuring the market all over the world. Let's see how this further goes. I'm staying obviously on the sidelines here. I don't have any stocks that are considered in China. I'm picking companies that are great for the next couple of years, so I'm not into the day-to-day, but obviously you need to follow all of these situations worldwide to understand what's happening. So there's also growth worries. As you know, since the health crisis, the stock market went absolutely nuts, right? With so many companies giving us record numbers, record sales, specifically those big FANG stocks. They had, tremendous. This brought the whole sector, 2, 3, 4 years forward, the digitalization and so on and so forth. But obviously, everything has an end and everything has a peak. So we have now seen in different industries that some factors, now the health crisis, for example, issuing problems for supply chains. So that's for one. So, companies cannot produce so much of their product because there is some shortage of the market of suppliers because they are in lockdowns and so on and so forth. But on the other side, you also see a big one in the tech industry, and that is, swapping over to the car industry, for example, as well as this chip shortage. Okay, the chip shortage is very, very serious because there's many of car manufacturers that actually cannot produce so much cars, so they have to put their workers to like unpaid leave and this kind of thing. So everything comes a little bit to a slower growth, or even if this continues, to maybe a still stand of company development. So this is another risk that people are watching. And if this wouldn't be enough, there's also the US government saying, we need more taxes for companies, and this is what the government wants. If this goes through, we don't know yet, but it would be also another, let's say, break for the growth of companies. So this is something that you definitely need to follow as well. And if this wouldn't be enough, then there's also the Fed meeting Tuesday, today, and tomorrow after the meeting, there is a small conference. So maybe, I don't know if it's really Wednesday or Thursday, but there's after the meeting, there's, a presentation by Jerome Powell or a speech by Jerome Powell, and tapering is somehow expected. Will they slow down the purchase of bonds and this kind of financial instruments? Interest rates should stay low for a while, and I think with the overall situation, the Fed maybe will not do big steps. Okay, they would just say they observe everything, and usually the stock market rallies into this meeting. So maybe we see a small bounce back today or tomorrow. Why we seeing this red on Monday? So I think that this is something to watch as well this week, which is very, very important for the market. And finally, there's also madness in the financial markets, and I'm talking about NFTs, those pictures that are on the blockchain and are non-fungible tokens. Well, those are absolutely getting crazy. Okay, I see on Twitter something that I saw on the crypto scene a while ago, that you see this new projects that are being the next 100x your money and so on. So I think there's a kind of madness going on. That's why you see this huge value creation there. A Cyberpunk goes from $16,000 to $50,000 to $100,000 to $300,000 to $500,000 in just no time. Well, this is not healthy. And with every small crisis, there's also here and there some bubbles, and I think currently we are seeing a little bit of inflation in this market as well. So if you are there, let me know in the comments which is your favorite NFT. Definitely a very, very big Wild West over there, but it's fun, right? It's part of the financial systems as we know it. Every now and then a little bit craziness in some part of that, but let's dive into the conclusion, what I'm doing and what I'm thinking about all of that. So let's dive in. So yeah, this was a lot of negative news, but as I said, those news were also known last week, so nothing new this week. It's just like also technicals. The S&P is slightly diving under the 50 moving average, which is usually a bad sign, bearish sign. So all of these factors together are showing that the soup is not really clear that we're having here, right? However, I still believe with all the money that the Fed is pumping, with still the digitalization is moving forward. It's like the first year of really digitalization. This doesn't mean that it ends here, that it's starting here and it's growing over time. So I think comparing the S&P to the overall economy is very hard because the S&P to a force is FANG stocks, right? So if you want to know what the S&P does next, you look at the FANG stocks, Amazon, Facebook, Microsoft, Google, Apple, and so on, and you see what the future will look like. And also the customers are there, okay? The customer reports last week showed us that the consumers are there to purchase more and more, better than expected. So it cannot be that bad. So I think we see maybe a bounce back, and maybe we see something that is a little bit of stagnation of the next couple of weeks until we know a little bit what's going on, how Christmas is, what about the supply chain problems, what about the chip shortage, what about, the consumers, what about the Fed? If we have more clearance, what about Evergreen, right? What will happen with Evergreen? So I think that's like a bad wave right now that could be temporary, and none of that is showing me a bigger problem on the big scene. Okay, so we don't see like a huge thing like the health crisis was, right? It's not like a lavine. It's more like a cold wind for the nice summer breeze that we had over the last couple of months.